Hey investors, there's ways to get rich in this life that don't involve pulling a Brett Favre and stealing from the poor. I had to reflect on a video where I said a good replacement for Stored Capital's 5.5% dividend yield was Prologis' 3% dividend yield. I got a lot of good feedback. Look, investing in dividend stocks with great capital appreciation and dividend growth opportunities is perfect for younger investors like myself. But I know I have viewers who just want that consistent, high dividend, high cash flow every single month. They don't have years to wait for that dividend growth like I do. And that's totally fine. I wanted to make it up to them by sharing 3 high quality, big dividend yielding companies. If the company doesn't have over a 4% dividend yield, I won't even talk about them. Starting off with, we have International Paper. That's actually the name of the company. I'm not saluting my non-US viewers for their paper chasing. International Paper has a starting dividend yield of almost 6%. So what does this company do? This is a company that specializes in producing fiber-based packaging pulp. This is the type of material needed to create cardboard boxes and paper. Think about everything that comes in a box. Yeah, basically everything. And if Michael Scott ever taught you anything, it's that paper is a very profitable business. That and how to declare bankruptcy. Boxes need to be a very particular way. We're not going to ship an iPhone in a box meant for a large flat screen TV, right? They also make the cellulose fiber products that are needed in everyday products like diapers, feminine products, toilet paper, pet care, etc. We all know how much e-commerce is growing. All these boxes, they have to come from somewhere. This is a company that made nearly $20 billion in net sales last year and makes over 100 million boxes a day. In the past 5 years, the company has returned $6 billion to shareholders. Over 50% of their free cash flow went straight to investors. This is a company that's been around for 124 years and paid consecutive cash dividends since as far back as the 1980s, so you know they're a very reliable company. Ticker symbol IP is trading well below its 200-day moving average of 44.78, which means that dividend is even fatter. Stock number 2, Realty Income. Everyone knows this stock, but everyone on my last video commented that they are buying more and more shares of O, so how could I possibly not include them? These investors are buying a fantastic company. This is a massive real estate company with almost a $40 billion market cap. The company has over 11,400 commercial properties that are under contract, basically locking in future cash flows. Real estate is about as safe as an investment as one can get based on history. Realty Income is well diversified, with over 1,100 different customers in 50 states, as well as various other countries. And we're talking great tenants like Walmart, Starbucks Coffee, Walgreens, 7-Eleven, FedEx, etc. And all their properties are triple net leases, which basically means the tenant has to handle all expenses of owning a property. Their leases are typically 15-year contracts and offer annual rent increases to keep up with inflation. Being a landlord is just so much work. Here, we can hire an experienced management team to take care of all the work and liability for us. O is on track to acquire $6 billion in acquisitions this year, and they have a solid balance sheet, allowing them to gain an advantage when it comes to accessing capital. Long story short, the company is still growing its massive portfolio. Realty Income is popular for its monthly dividends, and the company has been paying them since they became a public company in 1994. Doesn't get more reliable than that. And man oh man, the latest stock market downturn has O at nearly a 5% starting dividend yield. That is an absolute bargain for this high quality company. I currently own almost 32 shares of O and get paid about $100 every year from the monthly dividend company. The next company with a fat dividend is Prudential Financial. This is a financial services company offering insurance products, annuities, mutual funds, and other investing management services. The company has over $1.7 trillion in assets under management. Not quite at BlackRock world domination levels, but that's still quite a lot of money they can charge fees on for investing. The company is known for its robust balance sheet, which has a AA credit rating. Prudential brought in $70 billion in revenues last year. Since you're watching a video about stock market investing in your free time, you probably sometimes forget that the vast majority of people have no interest or knowledge in stock picking. It's worth it for them to pay a company like Prudential to manage their money, and that's exactly what this company does with their retail investors, institutions, as well as pension funds. The company also offers several insurance products, including life insurance, which they have about a 7% market share of all life insurance agreements out there. Prudential has been in operation since 1875, and they have just been paying out shareholders for quite some time. They have a 17% CAGR since 2008, which is just amazing, and they only have a 32% dividend payout ratio. Expect this company to continue being strong even with rising interest rates. Prudential has a strong starting yield of 5.5%. Though I'm gonna flex a little bit here, some of my earliest shares of Prudential, they have a yield on cost of over 11%. I swooped in and bought some during the peak of C19, or should I say the bottom of C19. Those are some of the best investments I've ever made in the stock market, being up over 100% in capital appreciation, while getting 10% in dividend yield. That's not too bad. Think about that in today's environment. Are you sitting out of the stock market because stocks, they just have not been doing so hot? Are you selling your positions because the market went down? Just remember, if I hadn't taken the risk that spring day in 2020, I wouldn't have had the amazing returns I do today with Prudential. Will you be wondering the same thing in 2024? Alright investors, that's 3 fabulous high-yielding dividend stocks that I brought to your radars. You do your own research and see if it's the right position for you. We were really focused on consistent cash flow in these 3 companies. I mean, what good is a high-yielding dividend stock if the dividend is not reliable or gets cut tomorrow? Let me know more of your high-yielding dividend stocks in the comments below. Make sure you hit that like button. And since so many people have asked me to make a video about JEPQ, the sister of JEPI, this weekend I might finally sit down and make a video about JEPQ. So be on the lookout for that. My videos are always found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash. You later.